Second episode of Money Moves. We have a really great lineup of speakers and guests today to talk through tokenization of off-chain assets. So let's get everybody up here and then we'll get things going. I see Morgan's on here. Morgan, how you doing?
I'm good. How are you guys?
Doing awesome. Good topic to kind of wrap the day on. I'm excited to share today and hear what you guys are going to be talking about. Patrick, how you doing?
Good. How's everybody doing? Are you holding up okay?
Holding up all right. Crazy day,
nice.
Crazy week, crazy month.
Absolutely. And
never ends.
Yeah. Morgan, I don't know if you've gotten yourself anything poured out yet. I've got a Guinness here resting at its final stages, so it'll be perfectly timed for the beginning of the program.
I got this like Spindrift spiked sparkling water, which is dangerous because it tastes like juice.
Okay, so have a few on hand.
Dangerous.
I don't know if we told Chris and Jeff about our pastime.
Well, we have Chris and Jeff up here now, so maybe you can share with them kind of the rules of the game here to have a drink with you.
Yeah, ideally you have something tucked away in your desk or wherever you're taking the Twitter Spaces call from, but we usually have a little something on the side to keep things light. And on days where there's so much happening, sometimes it helps to have a little hair of the dog. So
yeah, awesome. We got them both up here now. So Chris, wanted to test out your audio real quick, see how you're doing.
Hey, how's it going? Sounds like I'm about to drive you guys.
That wasn't the idea, Chris.
And that's the intro.
No, this is going to be a positive one. We got enough negative news out there.
Yeah, I'm with you. And Jeff, you want to test your audio?
Yeah.
Awesome.
How you doing? Thanks for having me. Looks like we're looking for a little social lube today. I'm sorry to disappoint, but I have peppermint tea, and I haven't spiked it.
Presumably cold by now after being warm many hours earlier, like when we chatted the other day.
Yes. It's always cold. All of my caffeine.
It's an iced tea.
I'm always grabbing. Yeah. They're just cold. I've missed the opportunity for my caffeine inspiration.
Amazing. Yeah, I'll kick it off with some intros here. Thanks for everybody joining in. This is the second episode of Money Moves. The first one is on the Avalanche YouTube. If anybody wants to tune into that one, kind of covers off some of Morgan and I's background in the space, what drew us into it, and some of the principles we really had when we were coming at this topic of really bringing assets on chain and tokenization. For those of you who I haven't met yet, I'm Patrick Sutton. I run comms and PR for Ava Labs. And then Morgan Krupetsky, who's on the call, runs institutional business development for us. Then we have Chris Perkins, who's the president at Coinfund, and Jeff Vier, who's the senior director of tokenization at Republic Crypto. So these are our first guests. We're super excited to have them in the mix. And I think that they'll bring a lot of perspective to the crowd, and really hopefully we can all learn a lot from their chat. So first off, for Chris, and then we'll go to Jeff, is really, Chris, two questions we have for all guests on this. It's going to be, what was the moment you realized that you wanted to go into working with blockchain full time? And then how did you make your first dollar?
So first dollar is pretty easy. I was washing dishes in my uncle's restaurant, and he would beat on me as I was washing those dishes. Then one time he showed me a Full Metal Jacket, and I thought it was a good idea to join the Marine Corps. So I guess that was my first honest paycheck, was probably in the military. But then after the military, went into 15 years in traditional finance. I actually read a book in, I think, 2015. I learned about crypto 2013, read a book in 2015. I'm like, gosh, this is going to change everything, because I was running what would become the largest intermediary in the world, which was like one of the largest brokers in the world at Citigroup. And I actually thought back then, I'm like, you know what, I think I want to do this full time. I was about to leave, and then I just didn't have the risk appetite at the time. I had young kids, and I wanted to give it a little bit more time. And then as time went on, I think the final thing that did it for me, and again, I was coming in this like deep traditional finance world, was that the Basel regulations came out. And people don't really think about the Basel regulations. They think about like SEC, CFTC, and everyone always gets focused on markets regulations. But the most powerful regulations in the world, if you're a bank, is Basel, the regulatory capital rules. And when I saw Basel finally come around and put out rules around crypto, a light bulb went on for me. Because what it did was it actually legitimized the asset class. And I knew at that point there was no going back because banks now had capital rules. Now the capital rules are insane and they're super, super challenging and very expensive, and we can talk about it. But at the same time, it was this double-edged sword because it also gave birth to this and it legitimized the asset class. And at that point, I was a weekend and evening degen, and I was running the largest intermediary in the world at a time when intermediaries weren't as needed, and I knew I had to do it. So I joined Coinfund in in 21, and we're one of the OG crypto native asset managers. We have venture and liquid strategies, and it's just amazing to be that close to entrepreneurs and innovators every single day.
Amazing. And yeah, on that point of Basel, it feels like I remember those when my life on the more institutional side of my client base, how many times each of the mandates kept getting pushed back because they needed more time, right? And that as soon as you see, to your point of as soon as crypto got in the mix, knowing how much momentum then gets behind that for how much work has to go into compliance, like it's hard to ever stop that train, right? Like, yeah.
Yeah, totally.
Yeah, and then Jeff, you want to lead us off with the same questions?
Yeah.
What drew you into the space, and then how'd you make your first dollar?
Yeah, I'll start with my first money-making gig, and as Chris did. And I love this because we're coming at it from totally different arenas. So I think it'll make for an interesting conversation. But so my first money-making gig, and I had to think about this for a second because I figured it would be like mowing lawns, but it totally wasn't. So I went to a private Catholic school growing up, and on weekends when I was probably 11 or 12 years old, I would actually serve as an altar boy to Catholic weddings and get paid to do that, which is really funny because even at an age 11 or 12, I was clearly valuing money ahead of my time off already, already unhealthy, or the pursuit of entrepreneurialism, let's call it, versus money.
And Jeff, do you still do that, or have you moved on?
Yeah, of course. No, I've started to dedicate my time to other causes like the democratization of finance, which kind of brings me into like my first aha moment. My first aha moment was, first off, I was lucky enough to be brought into this space by a gentleman who I was working for here in Denver, Colorado, back in 2013. Actually, we started working on a project in 2013-14, which we helped later launch. That was the Shapeshift exchange, which is arguably the first like anonymity exchange. Pass one asset in, get another one out. And that was a huge aha moment for me, that you can actually like exchange money and not have to like trust anything. So I was lucky enough to actually have an aha moment, like working on the metal and like working in a crypto project. But the real click for me was, Ethereum coming online and the birth of decentralized applications and like the endless user experience problem that came with it. And I, had come from working on digital startups and working between business, product, and technology teams. And I just knew that this was going to keep me busy for the rest of my life. And, I've been fortunate enough to sit in a really interesting seat and work with a lot of projects and help a lot of big projects actually go to market. So I can say that I have aha moments probably once a month for the last 10 years as it relates to crypto.
Amazing. Awesome. Well, let's dive right in then. I think the first thing we really wanted to go into is really, what does a world look like where institutional and decentralized finance just become finance, right? Or we stop creating this divide between them. It's similar to like how digital marketing and marketing just became marketing, right? So with that, maybe Chris, I'd like to hear you go first on this one. is really, what's a potential end value to the user when finance just becomes one, as opposed to splitting these into separate vertical shells.
And Chris, let me just real quick, just to level set for all of us. I think on the call we have like a very wide variety of partners and community members from the institutional side, as well as from retail and people just that are interested. And so let's see if we can let's challenge ourselves to simplify things as much as possible. And I know, Chris, you have a lot of stories to share. So we'd love to hear those as well.
Yeah. Hey, thanks, Morgan. I totally get it. And so, as I was describing who we are, I said, we're a Web3 native asset manager, registered investment advisor. But when you think about it, how many internet hedge funds do you know? How many internet venture capital funds do you know? Right? Like at this point, everyone, uses the internet. You have tech maybe. And so that's the world that we're quickly approaching. And to me, it really starts with first principles. Like what defines the best market structure, and like what principles are you trying to solve for when you're looking at traditional markets or any markets? What do you want to see? You want to see really strong client asset protections, right? We just had this issue with FTX, and people were saying, "Oh, this is a crypto problem." Well, no, it's actually a centralized finance problem. We can get into that, but like you want a market that solves for client asset protections. You want a market that's transparent. Like some people will say, "Oh no, so transparency is not always good." It's kind of hard to make arguments where where you're arguing against transparency, and I think that's generally healthy for markets. You want a market that's very cost efficient, right? Where there aren't so many toll takers everywhere. And that also leads to more inclusive markets where people can participate in various products. And today, most of the bar to either participate in certain products is a function of how much money you have. Like, is that right in a democracy? I mean, shouldn't it be based on how sophisticated and knowledgeable you are? And of course, you're going to need things such as such as risk disclosures. You want an environment where there's a ton of engagement, right? Like today, there's proxy voting with equities, where if you hold a share, you can vote. Unfortunately, you don't see a lot of people participating in that governance process. But as now we're starting to introduce tokenization, you have governance tokens where maybe it's more accessible for people to engage and to vote on the direction. And then the last, I guess off the top of my head, the last principle that you really think about is privacy. I think privacy is super important, and how can you balance privacy with transparency? And like the good news is that there's some amazing technologies coming on board right now, things such as zero knowledge proofs, that can kind of deliver both compliance and privacy, which is fantastic. And so when you start with those like core principles, the question that I have is, what technology allows you to deliver on those principles in the most effective way? And if you go back in history, we didn't have great technology. Like I worked at traditional finance for 15 years, and like even when I left, we were using green screens from the 90s to do some pretty material things. But in the absence of technology, you're required to centralize, and you need intermediaries, and you need these entities to come together, because the regulators didn't have great technology either. And so they would sit on top of those intermediaries so they can kind of see everything, because it was a technology issue. Well, guess what? Now, since 2008, we have this new thing called blockchain technology, which allows and enables trustless peer-to-peer exchange of value. And like this is the core thing that we've innovated on with blockchain technology, and it really goes back 7,000 years ago. It's a ledger, right? It tracks assets and liabilities. It tracks title. And 7,000 years ago, this concept of a ledger started in Mesopotamia, and that's when there was it led to incredible economic progress. It was a center of art, science, mathematics for centuries, because they started this thing called a ledger. We had a second innovation in the Renaissance with double entry bookkeeping, and now we've got this new innovation on the ledger, which is the central part of the economy, and I'd argue civilization, where it allows trustless, permissionless exchange of value, title transfer, et cetera. And so where are we going? We're going to a world where we can leverage technology such as blockchain, that delivers on those principles, I think, much more effectively, because you don't necessarily need those intermediaries as much anymore. You can transact and exchange title without those tolls being taken. You can directly access marketplaces, directly without going through those intermediaries in certain cases. You can preserve privacy where you need to, and you can still be compliant. And so at the end of the day, to me, it's about focusing on those principles and then seeing which technologies can deliver them more effectively. I think the answer is pretty clear, that it's just a matter of time before the technology that we've introduced through blockchain, is fully embraced by traditional finance. Now, you're going to hear these arguments: private blockchain, DLT versus public. This is all part of the learning process. But for where I sit every day, I see innovation. It's pretty clear the direction of travel. And again, to me, it goes back to first principles.
Yeah, it's interesting to kind of make in that regard of the utility of even bringing utility to equities in a way where I think so often we talk about utility coming to tokens, but in your example of, say, governance, where you can actually make governance more practical with equity holders if that was a tokenized asset. I think it was an interesting case that jumped out to me of utility going backwards, like kind of up the value chain. Jeff, what's your take on that? On kind of the intersection of these two spaces, especially from your side of talking to so many issuers who are trying to figure out this market for themselves?
Yeah. So first off, I love what you kind of tailed off with there, Patrick, and everything that Chris has said is really important and a passion place for me. And I come at this from Bitcoin, right? Like Chris does. So Bitcoin before tokenization and really store of value and transfer of store of value. So I always go back to the principles. It's like peer-to-peer. Peer-to-peer is really important because you've removed this, you've disintermediated this trust network that we've used for our whole lives. And we've realized that whenever there's a human involved in the trust, with ultimate power comes ultimate corruption, and that usually doesn't end up too well. So being able to kind of trust in the machine, trust in the code, and really go back to the principle of peer-to-peer from Satoshi white paper is really important to me. It also makes this really affordable when you remove all of that bloat in between the transactions. So peer-to-peer is a really loaded thing for me. Equitable access to wealth. Wealth has traditionally it's actually been legally restricted from people who can make really strategic wealth decisions for themselves because of their status. And when you tie a bow on this with things like zero knowledge proofs or I'd say like ZKYC or zero knowledge KYC, know your customer, you really have something powerful, right? Because you can know that you can trust the parties you're dealing with. You can allow them to interact peer-to-peer, and the institutions that may need to represent them can also verify that without having to know who they are. And to your point, Patrick, probably the most exciting thing that gets me excited, or the most exciting thing that gets me going with tokenization, and we encounter this a lot because we're working with issuers who are really curious as to like what tokenization is going to unlock. From my standpoint, the day that you take 100% of a cap table and you tokenize 50% of it, the 50% that you have tokenized is more valuable from day one. So think about that, right? It's like I've got 100% of a cap table. I've just taken some and I've modified and modernized the form in which it's in, and it's more valuable. And you could think about securities assets where I'm just holding it. It may deliver a dividend. It may deliver a dividend with a stable coin, and that's really great too. But what if that token on the security side actually started to become the utility token? And I think that's kind of almost like an end of the rainbow type of story for tokenization, when we've kind of gone around the speed at which regulators are allowing access for everyone to securities, and the security assets themselves are just becoming utility. And then you have this kind of homogenization of utility tokens and security tokens all existing in one and all accessing the same power of Web3. So that's a little bit of of a riff from me on where I see this whole thing ending.
Jeff, can you go into a little bit more detail on that last part? Because I think that's super interesting in terms of delineating between the tokenized version and not. Like, what about tokenizing something makes it interesting or more valuable? Like, if you could talk a little bit more about that utility and potentially like what's the so what? Like, how is it that it's more valuable from your perspective? And obviously, you guys spend so much time on that, so would love to hear your view in terms of like just delving in a little bit more into like what that means and how people can look at it.
Totally. So when you tokenize an asset, you already make it something that even regulators and even institutional, Goliaths and these giant things that stand in between us in this peer-to-peer transaction, entirely auditable, right? It makes it transparent. It makes the data real time. Right. So you're taking this asset that was kind of static. It needed a reporting period. You needed to have a username and password from someone for them to log in and see their position in the asset that's held with someone else. So when you tokenize anything, you immediately make it Web3 capable. So and people can legally custody a security asset in a MetaMask wallet. They don't need to do that at a custodial domain. So imagine me taking my, ABC security asset of a startup that I've just bought, and I go to the domain of that website or the domain of that business, and I connect my wallet, and I'm getting real-time performance data on the business. I'm getting perks or utilities for that business by way of just the asset being more capable than paper. And I'm also able to do this all in perhaps a zero knowledge way, which would be amazing if I could do that in a private way. But I'm able to use the asset in a way that was never used before. So for those reasons alone, it's more valuable. It's the paper stock or like the paper security is now technology. And because of that, you can program it. And to Chris's point, that should get really exciting when you think about managing partners and those people who are holding tokens in a regulated framework being able to make on-chain decisions and actually contribute to the direction of the business that they've invested in. And that's why security tokenization or just tokenizing assets becomes far more valuable and just far more capable.
Again, it also heads off a situation like we saw with Dole, say, having far too many shares outstanding and more of those trading than they had ever actually had the authorization to issue. Which I'm thinking of like the cleanest way to solve these problems is to have this traceable across all entities. So we're all referencing one source of truth. But of course, I suppose that is the intention behind something like the DTCC.
Patrick loves his
intentions don't necessarily align. I do, because it blows my mind. It blows my mind. And then we got into the concepts of fractionalized shares and otherwise of equities, and I just kept going back to like, how are we going to get there if the plumbing on the back end still has some of this be an issue where we don't even know how many there are? Now we're going to fractionalize them further. I'm like, how far down can we go? Where like we kind of need to clean up the base level problem here. I think a lot of this does bubble up to risk, though, which is something that I know, Chris, is something really near to your heart and career, I suppose, given your background in institutional finance. For those who don't know Chris, he spent a long time, like you said earlier, within the institutional finance world, especially in the derivatives space, which is, if I can, Chris, let me know if you agree, but I think risk management is kind of the key and crux of the whole industry of derivatives. So, Chris, from your perspective, how important is the transparency and like bringing these assets on chain as like a risk management tool for both institutions and individuals holding or participating in these ecosystems?
Yeah, I mean, there are so many different risks that we deal with in traditional finance. I'm maybe talk about a couple of them today. I'll start by talking about client asset protection, right? And the way it works in traditional finance is that there's rules that govern like certain intermediaries, and we as intermediaries are required to put capital in certain places, and then our clients need to trust us that we've segregated their assets. And that's great, and it sounds wonderful. Except, when I experienced two instances in my career where things blew up, and that was Peregrine Financial and it was also MF Global. And in Peregrine Financial, the guy there was actually faking bank statements and saying, "Oh yeah, I'm segregating your collateral," and it was a big Ponzi. And, you fast forward to what happened with SBF and all the alleged fraud there, and so it's very, very difficult to provide true client segregation and protection of client assets unless you have transparency. And we tried to do it the day that Peregrine went bankrupt. I had been working on a project, and I tried to show my clients where their assets were in a very manual way when I was in traditional finance. But gosh, wouldn't it be amazing if we had a technology that actually did show people where their assets were?
Yeah.
And we do. It's called blockchain technology, right? And so there are so many opportunities to improve upon our legacy processes to provide that client asset protection, to embrace things. We have other folks out there that have this technology called MPC technology. There are ways to enhance client asset protection. So that's one thing to think about. But maybe the most exciting use case here for me, when I think about the risk that I used to manage, and I got parachuted in to run Citi's FX prime brokerage. And the day that I was told to run it, Bloomberg reported that we lost $180 million. It's a scary business. It's where I would sit between hedge funds and HF and high frequency traders and other people, and I'd intermediate their FX flows. The FX market is massive. It trades $7.2 trillion per day. I think it's actually up recently, closer to $8 trillion per day. That's 8 times the size of the entire crypto market. But the problem with FX is that we have this thing called settlement risk, where because currencies have to go through all the different correspondent banking systems, traditionally it could take me 2 or 3 days to have yen come in. And if I had if I was due to pay dollars out, I may have to pay those dollars out immediately, and I have to wait for the yen to come in. Well, there's a historic example of this where it actually blew up a bank. A bank went bankrupt. It was called Herstat, and so now we have this risk called Herstat risk, which is pretty major. And it's a scary thing, because what happens if those yen don't come in, or they don't come in on time, and you're suddenly you're suddenly out of liquidity. And so in traditional finance, we're like, gosh, we got to solve this. Let's create a centralized intermediary. We'll do all this netting. And they did it. It's called CLS, and it was somewhat effective. But of course, now you have a central vector of attack. Oh, and by the way, in the derivatives industry recently, there was one of the biggest hacks, ransomware, that we've ever seen with a company called Ion. So, departing from that centralization and vector risk, that vector of risk, on the settlement side, even that CLS program, it only could handle about 6 of the $7 trillion in netting. So you're still left with the entire size of the entire crypto industry today that's outside. And so I love this idea of real-time settlement with anyone in the world, because I don't have to wait for those currencies to come in. I get real-time settlement. It effectively eliminates settlement risk. It eliminates Herstat risk. And that bank in Germany, I believe, would still be around today if we had blockchain technology, because they'd be able to settle instantaneously. So those are just a couple of the risks that we solve here. And I think there's plenty more that we can unpack.
Yeah, and especially unwinding those in, say, off hours, or in hours that, say, a certain region or part of an institution that is global is, asleep or otherwise indisposed.
Well, I hate to say it, but I know a lot of entities just went through this a couple weekends ago.
Yeah.
Right. Where many folks across the industry used Silicon Valley Bank. And I can't tell you how many stories I've heard where people would set up the wires. They're like, oh my gosh, these guys are going, I got to get my money out. It's only insured up to $250,000. And so you race to get the wire set up, you press the button, and then, because there's operational issues on their side, the website goes down, and boom, you miss the wire cutoff. And now you've got to wait till the next day. And by the way, it's not there. And then it goes into receivership, and you may be lost. And so I know there's plenty of folks out there that wish they had the technology. Now, thankfully, things generally worked out for the SVB customers. But again, gosh, it would have saved a lot of stress over that weekend if that money had gone out immediately.
Yeah, and being able to unwind that like in near real time, as opposed to waiting and pulling that risk up until, say, open of business, having all this money go through rails that, to your point earlier about still being on green screens and Excel sheets, right? It's like we're kind of relying on old systems and then putting more pressure on them than ever and just hoping it's going to work out. And as we seem to find time and time again, it just isn't. Morgan, on that point, something that I would really like you to share that story from you guys speaking to some institutions over the last few weeks and kind of drawing this distinction or perhaps some of the branding around, decentralized to on-chain finance and how you found some reception.
Yeah. So I should add the time when Chris took over FX prime brokerage, I was actually in the FX business. So Chris and I go way back to those days. And I think one thing that I would mention, I think, it's not the most exciting or sexy use case, but the idea of atomic settlements, whether it's premiums or trades or frankly initial margin or variation margin when it comes time to talking about derivatives, to be able to calculate and settle that in real time is I can't overstate the importance of it and the innovation that it brings, which is something that's obviously very easily realized with blockchain technology, but to the extent that banks or other financial institutions can adopt that, I think even just that would be a huge step forward. But related to that point, I think just in our conversations with different types of financial institutions, so whether it's banks or asset managers or hedge funds, it's funny, this branding around DeFi, which has kind of turned, which was this degen term, and then they started trying to institutionalize it by calling it institutional DeFi, which meant something. But in some of our talks with financial institutions, we just explain it's really just the idea of using blockchain rails and in some cases self-executing applications, i.e. DeFi apps, to power traditional financial services types of trades and transactions. And so it took a while to for institutions to wrap their brain around the idea of institutional DeFi, because I think again they thought it was some degen thing. But then they're so it's kind of bringing finance on chain, OnFi. Yes, you got it. It's OnFi. So we are rebranding institutional DeFi to OnFi and trying to make it more palatable for financial institutions. But I think it's just the idea of using this technology to really basically upgrade their legacy infrastructure and systems to just the newest and latest technology, which can really create major efficiencies and cost savings for them, for their middle office and back offices, which we're now calling OnFi.
Yeah, and then you give them something like that FX market that Chris was talking about, and then they see that a lot of their headaches can go away pretty quickly if they just get used to things being a little bit different than how things were at the moment. While we're still on the kind of institutional tokenization discussion, I know, Jeff, I know you had some comments recently about BlackRock kind of being just the beginning for a lot of tokenization we see across institutions, and I know Republic's doing a lot in this space with issuers. Curious, when they come to you, an issuer comes to you, doesn't have a blockchain team or that muscle built up, what are some of the first questions you're getting? How are you guys helping them sort through that? And just give me some perspective on that, because I think it's an issue. It's an area that I spend almost no time speaking to issuers. I'm not, I'm not privy to those chats. So I'm always very curious on that front, how they're approaching it, because they tend to be the people who move the needle more so as the buy side who's offering some liquidity here.
Yeah, and probably supply side versus demand side is probably maybe where we could tail off with this and thinking about what BlackRock did. So on a daily basis, I'm dealing with what we call issuers, because we Republic Crypto is also a team inside of Republic, which is a regulated crowdfunding platform. So on one side, I'm dealing with a crowdfunding issuer, right? It could be a new clothing line or a new tech startup, and in many cases with us, that actually could be a blockchain technology company, or actually a tokenized project that's going to be doing a regulated token sale with us. And so we get projects coming in to tokenize equity as well. And they, in a lot of cases, they don't even know why. They're unsure in a lot of cases why it would be valuable to tokenize equity or debt, which is unfortunate, but I get the great job of being able to educate them through some of those use cases. I think many of them think it would just be novel to be tokenizing their offering. And then for some businesses, they may be working in the crypto arena, but they're not tokenized themselves. It may be a traditional cap table business, and they want to kind of demonstrate or like have a gesture of like eating their own dog food and like, hey, we work in this space, we're going to tokenize our cap table. So we work with businesses kind of like across the array. And one val prop that I think they're not thinking about that we are is, what the instrument that you're tokenizing. So if you are trying to tokenize an instrument that's a dividend paying instrument or investor agreement, and it's going to have payouts, a lot of times the size of the investments you're doing at the retail level are small, right? It's, hey, I'm just looking for $100,000, and we're going to be going to this bridge round of funding, and people are trying to invest in that, and they want to offer dividend paying type of situations, and they can't because if they're doing that with paper, it's going to cost them $3 to send an investor $2, and it just becomes inequitable. So there's an access to delivering real value back to investors, where if you were to tokenize the offering and actually bring that settlement into on chain as OnFi, as Morgan would call it, you can really engage and access a ton of cost savings where dividends can be streaming without this large institutional intermediary in the middle that's causing all these fees to the small business. So the SMB size business can actually access really interesting instruments. And then the second kind of issuer type that I'm dealing with on the crypto side, because I do a lot of education for, call it enterprise level clients, that's like the private equity fund manager, or even like alternative asset manager, like art and collections and things of that nature. They see the value in a few areas, however, they often are like misguided in how they've gotten to that conclusion, or they're out of order. So they're interested in things like liquidity and the ability for investors or themselves to sell some or all of that fund and access liquidity somehow more so because it's tokenized. And that's just a misconception. There's really just not a large demand side that's established on these ATSs or these exchanges for buying these things. So you really need that two-way marketplace, which we really think we have at Republic because we have issuers and investors coming to our platform every day. So we think we're in a really interesting position to offer secondaries there. And then the exchanges are often like walled gardens to each other. So there's no liquidity passing around. So there's a misconception about that when it comes to like a fund manager who wants to tokenize a fund, and then it's going to have a liquidity, and it's just kind of a misguided misconception. And then they're also interested in the operational savings, the cost savings on the operation side, which is totally true. It takes a little bit more time to access it, but they're really interested in how they can improve their operation to save money. And they're also really interested in accessing 24/7 tradability, right? They're the settlement piece. They're really interested in the idea that their assets can trade 24/7 globally, and reach investors that they perhaps would not have reached otherwise. And then I think like lastly, maybe like hyper fractionalization, because like fractionalization, it's like, well, there's fractionalization can be done with paper. I think it's like when you really, really fractionalize things down to, what a crypto person would call like dust in your wallet, but like very small amounts of money, then you actually really are starting to engage a retail investor who can throw $5 at something that's been, entirely illiquid, like an art collection for years and years and years. And if I go back to like how you started this with like BlackRock and why that's innovative, what BlackRock did by tokenizing their ETF and having it trade on a DEX was they innovated at the paper level. Technology has been advanced. We've been ahead of institutional finance or TradFi for years and years and years. We're always way ahead of them, right? So we're always going to be way ahead of them when it comes to technology. So now it's really up to the legal teams inside of these funds or these institutional finance brands to get creative, and that's what BlackRock BlackRock did. They were like, hey, we're going to separate the claims from the redemption of these assets, and we're going to let them trade, and we're going to let the redeemable value of these assets go onto a DEX and participate in things like lending, posting as collateral, taking out a loan and go making a trade and coming back. That's really fascinating. And that's really where I see the innovation happening at the paper level, not at the code level, and just getting really creative legal teams in the room with your engineers. But then you start to see all of that value in TradFi and RWAs, real world assets, actually unlocking, because they're going into a system where you can take it and you can allow them to participate in finance, meaning like lending and borrowing. So it was just a really cool example of that. And so because of that, on the back of that, Patrick, a lot of the private equity fund managers, they're like, how do I do that? What did BackedFi do with BlackRock? How can we learn about how we can do that in the years to come?
If I could chime in, I think it's important to put some numbers around just how big a scale people like BlackRock and Fidelity bring to crypto. And we always talk about institutional adoption. Is it coming? Aladdin, which is the platform that it's BlackRock's it's platform that allows it to trade. It's called an OMS and a number of other things. It actually took that platform and extended out to asset managers throughout the world. It actually manages about $22 trillion in assets. And the fact that they're moving forward and creating the pipes to be able to transact with crypto kind of gives us an indication that we're a lot closer to really full-blown adoption than you think. You throw Fidelity on top of it, now you're at 25 trillion. Franklin Templeton is doing incredible things. They're at 2 trillion. So you can start getting a sense of how this money is starting to pile in, hooking up operationally. And I think the change that you're going to see as we move into an institutional tokenized landscape is going to happen much quicker than people expect.
I actually, Chris, would just tag on to that to say, you know, me and a couple of the other team members here have always thought, you know, maybe the banks aren't necessarily going to be the first movers, but it's really when their clients and when the funds allocating to those clients or those funds start demanding some of these services, supporting some of these services and products, that's when, you know, banks will basically have to follow suit and like, you know, really adopt this technology, or else they're threatened. So it's really interesting this time around to see their clients, the buy side, asset managers, hedge funds, really kind of starting to be increasingly more progressive in this space. That I think that's part of the reason why, we're excited, because we find teams and individuals within the buy side that quote unquote get it and are really driving these things forward. And I think that that's key this time around as it relates to off-chain asset tokenization.
Yeah, and I think we even saw that from a story of a comms person in a room you don't usually expect. It was like an MRAC, Market Risk Advisory Committee meeting from the CFTC 2019-18 maybe, where the desire to clear crypto derivatives drove a conversation all the way there for how these institutions would handle clearing these contracts that they otherwise weren't sure how to handle. And I think a lot of times it does come from client or customer demand. Before we open it up for some questions, actually, Chris, sorry, you jumped in there, and I know you are particularly close to these topics from your advisory work with these bodies.
Yeah, I testified in front of Congress on that issue, and Morgan, you're right. But I also think in certain cases the banks may not be needed because you can go direct peer to peer in certain industries. In others, I think they'll be able to handle tokenized assets. Like I said earlier in my earlier statement, bank behavior is driven by regulatory capital rules, these things called the Basel rules. And if you look at them, they actually give pretty preferential treatment to traditional assets that are tokenized. And so I don't see any gaps for them to adopt tokenization of real world assets for assets that they handle today. They're going to struggle a little bit more on crypto native assets because the regulatory capital, the amount of capital they have to hold is pretty astronomical.
Yeah, and I think the other part that's often left off the table is that people say that institutional adoption either hasn't happened or it won't happen or it's been slow and has died out. But what they have been doing this whole time is building up the muscle for especially the technical muscle and knowledge internally. Like I remember 2015 going and talking to banking clients and, working with technology companies in blockchain and crypto. And they're asking me like, what's your take on this space? Or, like, what are you actually hearing from your clients who are trying to make this happen? And the preparedness then versus what I'm sure Morgan and all three of you hear all the time now from clients and customers is totally different from the knowledge base that we had then.
Hey, Morgan, you talk about OnFi. I've got a new motto too. It's that enterprise tech doesn't mean old tech. Because I feel like in many cases you talk to these old institutions, they're like, no, like we can't embrace new tech because it's not enterprise. Well, it can be. And I think that's
Totally.
right. That's
Totally.
the bias that we have to get over. Enterprise tech is not old tech.
Yeah, and the implicit bias of saying, well, it's worked good enough is like, well, good enough, I don't think is totally handling the pressures of how much, say, volumes, on-demand access we see, and especially like these liquidity crunches. It's like the system that worked or like maybe worked to some extent or worked good enough, I don't think necessarily holds up with, especially when you consider like users and investors much more taking that on themselves rather than going through the intermediary, going direct to a supply side.
We're living in 24/7 markets, and if we can't settle in real time, we're going to have issues. And I think we just experienced that across the banking sector.
Absolutely. Before we open it up for questions from the crowd, I want to know if there's some favorite resources that you guys both use, or some blogs to follow, things that you really lean on to stay informed on markets, informed on what's happening in the space, especially with how fast it's moving. But just curious if there's anything you in particular lean on.
I guess, I'll go first. So I am like a habitual podcaster. And it's literally everything. There's obviously some podcasts that I try not to miss. I really love Blockworks podcast, and I never miss On the Braincastle Islands weekly roundup on Fridays. But I'm just like a habitual podcaster because it's what I have time for. It's just always on in the background. It's always in my ear. I'm just constantly plugged into like all of the wealth of knowledge that's coming out of the private businesses in our space, and the audio content that they're putting out. And I can provide a list for everyone afterwards, Patrick. Yeah,
definitely. I'll send you the link to the tweet for this one. If you can just throw it in there, we'll include it in the thread for the Twitter Spaces.
Yep.
So I think that's always useful. I'm always keen to like information share as much as possible to get people thinking more along the same lines.
For sure.
I follow Morgan for sure.
That's a hack. No, that's a cheat.
Chris, I get all my content from you though, so it's like
That's why that's like that. Okay.
Yeah. So podcast totally nonstop. Incredible resources out there, all open source. Twitter is also awesome. And then the other thing that I found is that over time you start linking up with people, and you start forming like these groups on Telegram, and they're incredibly informative when you surround yourself with the right communities. And some people use Discord or Telegram. When you get yourself into those communities, you learn so much in real time.
Yeah, same. So as Patrick, Morgan, Chris knows, I do not come from a TradFi background. I come from, technologist, tech startup. So, it's not my first nature to have access to, perhaps the publications that they will, but I'm in, Telegram groups, to Chris's point, where I'm learning from, the wisest, sharpest, most innovative, creative minds in legal, right? So I've really cherished being able to access those groups and access those people. In large part, they're talking on Twitter every day, right? So if you just kind of hook in, you'll really kind of ride the coattails of some really interesting conversations and learn a ton.
Yeah, I tend to find people in this space, like especially young people joining in for the first time, ask me like, how do you survive this long? Or what drew you in? Or how do you catch up? Most of it is just realizing there's a lot of expertise in domains outside of crypto that are in crypto, and people are more willing in this space to lend or share that expertise than I think any other industry I've been in or a part of. And
the democratization of information.
Hey, it sounds like a marketing phrase, but it definitely checks out. It's like the advice is always like just lean in, find some communities to be part of, and learn first as like a user or member of the community. With that, do want to open up for questions of people from the crowd. Some like general guardrails for it. We're not going to talk any deal specifics, price, or any financial advice, as much as I'd love to hear these fine speakers' take on the markets or what I should do with my personal finances. That's not the right place to ask. So yeah, anything else though? I'll hop up and let's chat.
Awesome. Thanks, Patrick. I will start calling anybody that's requested up. So hit the mic button on the bottom left to request up to be a speaker. We'll definitely call you up one by one. So yeah, Day, you're up first.
Well, what for me, thank you very much. I'm Day or Andre, and I'm from Romania. I'm a community leader in a lot of Telegram groups. I'm not so active on Twitter, but in my free time, I'm also listening to whole WhatsApp also on Twitter. And my question is for all of you guys, and the question is, what is the difference between the blockchain now and the internet in 1990s? The impact of the people, I mean, or to be more perspective for the adoption.
Mm-hmm. So I mean, I can start. Thank you, and thanks for staying up late if you're in Romania. When I was in my college dorm room in the 90s, the internet was kind of like, I make it kind of akin to early civilization. It was hunters and gatherers, very fragmented. And then in time, we gave birth to this thing called Web 2. And like civilization, we graduated from hunter-gatherers into like monarchs, right? Sovereigns, the rise of sovereigns. And Web 2 is really predicated on high central control. About 5 people control the internet. We are working the land as the serfs. All of our data is being taken for free by the sovereigns, and we're the serfs. And in return, we get a great user experience, and that's just how it is. As we migrate to Web 3, right, we've been able to kind of in a way introduce democracy through tokenization, through governance. And we've done something really interesting. For the first time, we've been able to put private property into the internet, and we've been able to allow content creators in the creator economy to be able to put that put their content and monetize their content and interface with their peers. And so the civilization is evolving very, very quickly. It's disrupting the old order. And you asked about people. To me, Web3, this thing we call Web3, is about community. I talked about community. You're in communities on Telegrams. It allows you to come together much more effectively with fellow community members of shared beliefs, but in a way that's different than Web 2, which gave us social media.
Chris, by the way, I'm stealing that for the long haul on like the positioning of those three. I'm going to clip that and just put it into all my writing, but I'll make sure I reference you. I'll give proper.
I told you he has good content.
Thanks, man.
So I'll just add to that. So like it really, we're and Chris mentioned this, we can own private things, but the internet has kind of marched along as read, write, own. And like we're in that ownership, time of the internet right now. And the most interesting thing that we're owning is money. And now money is the internet. And money's been digital for actually a long time. If you look at, finance, and now we're getting the first crack at actual provable self-custody ownership of money in a digital way. That's what blockchain is doing. From a technical standpoint, blockchain has flipped the entire protocol on its head. So, we built applications across the 90s, early aughts, and you built them on HTTP. Thank God HTTPS came along. That's not good enough. And you're building layers of security on top of the protocol. And it just introduces all of these areas of vulnerability. We flipped that on its head, and actually the protocol layer is the most secure. And that has enabled us to build this custody system and this way for us to own massive amounts of wealth on blockchains safely. And that's incredible innovation.
Awesome. Yeah. Thanks. Great question. And thanks for the follow up there. A lot of good insight there. I'm already clipping that moment. So don't worry, Patrick, I got you.
Clip.
Yeah, great. Thanks, Dave. We got time for one more question, just so we can wrap it up on time here. So I saw BB, you were the next one up to ask a question. So I wanted to give you an opportunity to speak with the guest here.
Hey, thank you for having me. It is midnight in Istanbul. So hello from Istanbul to all. I have a couple of different questions. But firstly, I would love to invite the Avalanche family to raise awareness about the climate crisis for the future of our world. So my question is going to be also Jeffrey. By the way, Jeffrey, thank you for everything. I mean, I feel really brightened about the tokenization, but also I have a question about the ICOs. How is important to showing your vesting schedule in the ICO projects with the community? I would love to learn and hear about it more. And my second question is going to be about the token IDs. As Avalanche community, do you have any projection about to doing something ID token for the investments in the future, like the Binance?
So let me take the first one, and I may lateral the other one to Morgan or Patrick. So yeah, when we actually do a lot of work like this with Web3 founders, and it happens at a varying degree, and I think it's incredibly important. The most I think genuine gesture that you can give to your community is to not only you're going to be able to demonstrate and show your tokens and where they reside on chain, because that's just the nature of the technology. It's transparent. You can explore it. It's great. But you can also further that gesture by taking the strategies that you've put forth in your allocations to things like community, as well as obviously your team and your shareholders, and you can programmatically release those, right? So you can actually put those in vesting contracts and programmatically release them, and that can be explorable too. And that's a really powerful gesture because there can be no human intervention. So that's something that we work with projects on to kind of toe that line of how flexible they need to be with their strategy versus programmatic or decentralized.
Okay, I appreciate it. Thank you.
And then I'm not sure I followed the ID question, but if anyone has a little bit more, I'd love to help if I can.
Patrick, I don't know if you want to.
Yeah, what was the second part of your question, BB?
The second question was about the is there going to be any project for the investments, like to building maybe new token for the Avalanche investments? So as a coin, when I want to be in the also different networks, it would be really helpful for me also having community in Avalanche. So as you know, it is already existed in the financial crypto listings like BNB and others. So I don't know, have you ever heard about the Space ID token? It is new, but it is on BNB. So I was wondering that, and I've checked actually also Ava Labs. So when we want to get investment, we need to go directly to the Ava Labs. But I was wondering that is there any special token to make fast to this process?
Yeah. First, I hope everything's okay in Istanbul and Turkey with the earthquakes last month. I know so much of our community is there, and that's
I appreciate
truly,
for thinking about it, Patrick. I'm sorry, I'm going to interrupt you here, but we are grateful for having Emin. He helped to the region really great way. Also to all the actually Web3 community, they helped us and support us a lot. It's still continue and it's going to be continue. We have elections in next months. And it's not going to be easy, but I do believe that Web3 community is going to be more strong in next quarter because of the increasing inflation and also other reasons. But thank you so much for also mentioning about it.
Yeah, of course. It was top of mind and remains top of mind for so many of us. It's been one of the great joys of this job has been to spend so much time with communities all around the world, but especially our Avalanche family in Turkey. And I also agree with you on the climate point, which we've done a lot of work on that. I'll include some links in the thread to that as well about some of the efforts we've done to go beyond just the eco-friendliness of the Avalanche consensus protocol and blockchain, but also things like carbon credits and whatnot, which are a start. But I think we've got bigger plans in mind, especially with our friends at like Lemonade and otherwise. On the ID tokens front, I'm not as familiar with Binance's efforts on that, or like the BNB community. I would imagine if it's about like, say, institutions or about identity verification to participate in things, that would be very much done on like the application side of somebody like Republic or Securitize or otherwise, like handling verification of participants in a project. But that wouldn't be something that necessarily comes from us as much. That would be much more so like a community-driven effort, and technology specific to that is how I'd imagine it.
Patrick, I might just add to that. I think, BB, we've seen a lot of different projects that are kind of trying to drive forward these efforts, whether it's KYC, investor accreditation, other types of like digital identification, and being used both in, frankly, security token protocols as well as those that are not, but want to kind of identify or KYC their users for various reasons. And so I don't think that we've seen kind of one solution that necessarily has won out. And it'll be very interesting to kind of see how this space evolves. But it's definitely something that we're seeing more and more of. And I think, Chris, you guys are probably seeing a lot of it too, in terms of the various providers that are coming on board to try to solve. Frankly, it's really solving for just the ease of the user experience, because right now when you go on different applications, you have to do a whole onboarding process every single time. So to the extent you can leverage something that you've already provided or information that you've provided without actually handing over and storing your information somewhere else and somewhere centrally, I think that's what a lot of people are trying to work toward. And it'll be interesting to see how, when different financial institutions come on chain, is there a way for them to leverage a common solution or a common baseline solution in order to really streamline the user experience? So I think that it's a super interesting space that I think is still very much in development.
Yeah, let me just chime in. And maybe, again, our thoughts and prayers are with the people of Turkey and beyond that were impacted. But totally agree. I think certified credentials are a major theme right now in crypto, as is refi. And you talked about global climate change, regenerative finance. We're seeing a ton of projects that are focusing on tokenization of carbon credits, verification of those credits. There's entire conferences put around this refi initiative right now. So I encourage you to take a look at it. But again, on certified credentials, there are different ways people are going about it. One is through things such as soul-bound tokens that carry with a wallet, or certain ecosystems that in order to enter, you have to show a degree of credentialization. To me, the most effective ones are ones that provide incentives for participants, that are not just standalone. Hey, I'll give you certified credentials, but hey, if you want this cash flow or you want to participate in this liquidity, then you'll have to come in through the certified credential regime. Those are the most effective that I've seen to date.
Amazing. Thanks, Chris.
Thank you, Chris. Thank you, Patrick. Also, Morgan. Spice ID mission was different than the KYC and the security tokens. Actually, it was for the managing all the different coins and tokens on the same site. Also, Chris, thank you for explaining about the carbon reduction projects on Avalanche. But to us, it is not enough at all, because also traditional market and the industries are working about the key carbon reduction measures So from the Avalanche community, we would love to see more different projects as social good projects, and also it might be raise ambitions and the approach maybe in the also Web3 community. So thank you again, and have a good night, or have a good day wherever you are.
Yeah, completely agree. There's plenty of work still to be done.
Thank you,
unfortunately, we're right up at the edge of our time here. What's clear to me is that we're going to need to have Chris and Jeff back again because there's plenty of questions lined up in the queue. So with that, I want to thank our guests again for joining. I want to thank everybody else for joining in on the audience side for some great questions. Really fun chat today on, in the middle of an otherwise eventful week, but I'm leaving here really energized. Chris, Jeff, Morgan, anything else you want to leave off with before we all head our separate ways?
Thanks for having me on.
Yeah, thanks for having me, and stay positive. After all, it was inevitable.
Love it.
Love it.
Thanks, guys. Really appreciate it.
Thank you.
Amazing.
So much.
Thanks, everyone.
Thanks, everybody. Bye.
See you next time.